Today is a big day for Mullen Automotive as they try to gain compliance with NASDAQ. We have Thomas Hughes back with us today to discuss the details. Thomas, today Mullen investors are going to find out if the company is staying in NASDAQ or if it's heading towards delisting. It's some serious stuff. The stock price has been all over today, up as much as 20% earlier we saw. And at the time of this recording, things are looking good. But what is going on? Can you explain that to us?
Right. So in this case, NASDAQ compliance means keeping the stock price above $1 for at least 10 days. The stock price fell below $1 last year. They received their first warning. They weren't able to get the price back above $1. They got their second warning. They technically have until September to get above $1 for 10 days, but they went ahead and did a reverse split earlier this month to get that price above $1. So today is the 10th day since the split was active. If they can hold above $1, it will mark a major turning point. They will have regained compliance. They will keep their listing through the end of the year, probably, unless the stock price falls back below $1. That does not look like it will happen at this time. It seems like the market is supporting it fairly well. And really the key is just to maintain that listing for market confidence, to help them through the start of production and the ramp of volume production, which is supposed to begin this summer.
All right. So Thomas, I know from previous discussion with you that you had found this stock using MarketBeat stock screeners last fall. So I'm just curious, what caught your eye back then, and why do you think it's still worth watching despite everything that's going on?
Well, for me, it started with the purchase of Bollinger Motors. The stock kind of came out of nowhere at that point. It had been around for a year or two, but kind of biding its time while other EV OEMs were floundering around. And since then, there have just been so many catalysts, one after another, it seems like. They gained momentum when they purchased the electric last mile assets that got them another factory. They gained more momentum with the IGO deal. They're leveraging Chinese technology, opening sales channels in the EU, trying to get revenues started. More catalysts came about with Randy Marion's deal. They've sold some vans through Randy Marion. They've got orders for many millions of dollars of vans. They've got some partnerships with Rapid Response Defense Systems and Menzies that could also pan out into lots of sales. And even the Harge angle could pan out to be good for the company, although it seems too good to be true. And do you know what jumping the shark is?
I kind of think I do. I know that like picking the right stock, it's a lot like catching a perfect wave. If it's good, it's going to take you for a long ride, but an underperforming stock can put you under quickly, right?
Right. So jumping the shark is just when things are too ridiculous to believe and the market loses attention. And that might have been what was happening when they announced the Lawrence Harge deal, but we still don't know. That could totally pan out. It's just one of the many catalysts and also one of the many potential risks of this company.
All right, so earnings came out this week and showed significant cash burn. I know investors have concern. They're nervous. They have every right to be. I'm not trying to be a Debbie Downer here, Thomas, but how can you justify that?
What, they're being nervous or the cash burn? I mean, the cash burn is pretty high, and that makes people nervous for a reason because there isn't very much cash. I believe that's why they backburnered the 5 startup. That was supposed to begin production this year, but they pushed it back 2 years. They've got so many irons in the fire and so little cash that I believe they're just going to focus on the commercial vans for right now. And if you think about it, they might be able to sell 10,000 SUVs in a year, 20,000 SUVs. They're going to sell hundreds of thousands of commercial vans. And I think that's the real moneymaker for them. So they say they have enough money to make it through production. That should begin in July and August with revenue starting in August. So they may have enough money. It's just a matter of kind of a wait and see. They're kind of rushing towards this cliff. And the question is if they can get across the finish line.
All right, so I'm curious what your take on this is. To me, it seems like the company has been letting out never-ending strings of releases, like coming from every direction, Thomas. I'm sure you've seen it, but the stock still isn't budging. I feel like the news that we're seeing, it's mostly the same news time and time again, but it's coming from a different release. So what is your take on that?
Well, the CEO is trying to keep people interested. He might even be trying to spark a short squeeze. He's definitely trying to keep the stock price up to maintain that listing requirement. But I think the reason why the stock price hasn't budged is because of the threat of dilution. Up until just recently, the first part of this month, there was the threat of increased share count and a reverse stock split. Both of those things dilute shareholder value, and they were on the side of the bears, in favor of the bears and the short sellers. So it was just an extra added pressure that made it very possible for the bears to just dump shares onto the market and keep the price depressed.
All right, so I know you also mentioned in an earlier video, the one that we were discussing, where we're going to spend $5K in the stock market. You said you were going to roll with Mullen. Here's your chance at a mulligan. Do you still feel that way?
Yeah, because you can't win it if you aren't in it. This is a high risk story, right? But it's a compelling story. And remember, I was talking about windfall money in that video. We're not talking about retirement money or the rent money or your kids' food money. This thing could be all smoke and mirrors. It could go to zero. That could completely evaporate. But there are some compelling factors that make me believe that maybe it's not. And the C-suite is one of them. The C-suite are all the executives that are operating the company. They have managed to attract several high-profile C-suite executives from companies like GM to head up their commercial divisions and their sales divisions. And you can tell that those hires are paying off because of the deals that they're getting. So I don't believe that those guys would stick around and do their job if they thought that it was a joke, if they thought that the company wasn't going to make it. But also the institutions have recently started buying. Their signal was the reverse split. I think that now that the reverse split is over and the immediate threat of dilution is past, they're ready to start taking some small positions. Buyers include some big names like Deutsche Bank, UBS, BlackRock, and Bank of America. They don't own much, about 7% in total, but them buying at all is a signal that there is some value in this company and that investors might want to consider a small position.
All right, well, there you have it. Will Mullen stay in NASDAQ and maintain a share price of over $1? As of right now, the price is looking at 125. So we're going to see where this leads us. Stay tuned. We'll be updating you here at MarketBeat. But let us know in the comments what you think of Mullen. If you're planning to trade or invest, we want to hear it. All right, thanks, Thomas. We'll talk again soon.
See you later, Lacey.